estate to real estate. It's Money Matters with Dino.
Nick, let's get kind of into the next aspect of it. If somebody has a note for, let's just say $400,000, and they're no longer making payments, and it's considered a non-performing note, how do you value what that is worth? Because at one time it was worth $400,000, but now what? What's it worth?
That's a great question. Typically what happens is when borrowers fall behind, lots of them try to do a loan modification with the banks, but big banks like B of A, Wells Fargo, Chase, they have only 3 or 4 different scenarios in which a borrower can fit in. And a lot of these borrowers, unfortunately, do not fit those scenarios. So therefore, the banks go out and sell these notes at heavy discounts to hedge funds or investors like us to basically get them off their books. We don't necessarily buy one note, one-offs at a time. Typically what we do is we buy a big tranche of properties, maybe anywhere from 100 to 200 properties at a time. And the more you buy, obviously, from the banks, the more of a heavier discount you're able to get. So because of our ability to buy a big chunk of properties and get it off the bank's books, we're able to get heavy discounts on these notes. And that also depends on where some of these properties are located. Are they located in non-judicial states versus judicial states? In areas such as the north or the south, obviously winter matters. So we know exactly what we're looking for, and we buy properties that we know we're able to successfully work through, which I'll get to here in a few minutes as well.